Let's find some day trades, swing trades, and option trades. It is August 6th. We are about 3 hours into trading. Hello, traders. We've got a market that's stuck in a trading range today. We're not able to get through the high from the prior day. You can see there was the high from Wednesday. We poked through it briefly. Anybody that bought right there got flushed out immediately. You can see right there, the long red candles closing on their low, and the market tested the low of the day. We'll go into that 15-minute chart so you can see a little bit of a broader perspective. That is a pretty major support level that's developing right around that SPY 331 level. But we have a very tight range. The average true range on the S&P 500 over the last 10 days has been about 40 points. Yesterday we had a 12-point range. Today we're probably going to have maybe a 13 or 14-point range. Very, very compressed trading. We've got a major news event coming out tomorrow. We have the unemployment report that's going to be published. Analysts are looking for job gains in the 2 million range. Earlier this week, they were looking for job gains of, I believe, about 1.2 million in the ADP report. We only got 167,000 new jobs. So jobs are going to be an issue with the coronavirus spreading right now. We've got a lot of industries who have not been able to resume production. And I feel that with each passing week, we're going to see that number increase. Initial jobless claims this morning came in. We had an increase of about 1.1 million. 1.1 million people, new claims filed in the last week. That was much lower than the 1.4 million that was expected, but still, it's a big number. So we've got a market that's floating higher also because they are pricing in a $1.5 trillion stimulus package. Republicans and Democrats are still haggling over it. Republicans want to supplement unemployment benefits to the tune of $400 per week. Democrats want to keep it the same at $600 per week. President Trump has been talking about a moratorium on evictions and having it last through the end of the year. He said he'd use his executive power if he can't get it, if Congress can't approve the stimulus bill. Don't know if he's got the power to do that. Don't know if anybody would resist him on it. But 23 million people could possibly be evicted in October. So the condition is very tenuous right now. The market has been drifting higher, so everything looks good on the surface. But if you lift up the hood, you can see that the rally has been very narrowly defined. Tech stocks are leading the charge higher. There have been some really good plays in tech, and we're continuing to do that on a day trading basis. You know from my prior videos that if you're a swing trader who can't watch the market intraday, I'm suggesting for you to be in cash. Things are really going to quiet down after tomorrow. We have earnings season winding down. We have a lot of companies in the back half of earnings season that are going to report soft numbers because they're from soft sectors. Retail, for instance, energy, restaurant. Those are the companies that are going to be reporting, and they're not really market driving stocks anyway. The big mega cap tech stocks have announced earnings, so that optimism is already priced into the market. We also have very light economic news coming up. This is going to be the dog days of summer. You're going to have politicians are going to get the stimulus bill passed, and then they are going to head out to recess on August 10th, so you won't see them until Labor Day. So the market tends to get a little bit nervous in August because nobody's minding the shop. And we still do have the coronavirus spreading, lots of questions about kids going back to school. So there are a lot of unresolved issues currently. There have been more than three-quarters of the S&P 500 companies that have reported. On average, revenues are down 11.5%, and we've got profits down 33%, more than 33%. Not a good showing. Everyone is discounting what happened in Q2. It's a one-off. We're going to be right back on track in Q3. Go, go, go. 0% interest rates, lots of stimulus out there. That's been the focal point, but I don't think we're going to see Q3 as robust as everyone is pricing in. So, in my opinion, I feel that the upside is fairly limited on the market, but there are downside risks. So, On a longer term basis, for swing traders, as I mentioned, who can't watch the market intraday, I think your best play is to be in cash. Wait for that pullback. That'll set up a better buying opportunity. The other possibility is that we just tread water here for the next week or two. Well, if you're on the sidelines, you don't have any risk. But in 3 weeks, we should have more clarity. We should be seeing some improvement on the coronavirus front. And I think that that will present us with a better entry point, and then we can resume selling out of the money bullish put spreads on the notion that conditions are going to continue to improve. But I'll be watching that weekly initial claims data week to week to week to week because I want to see if the unemployment scene is starting to deteriorate. This new stimulus package is only a quarter of what we saw in May. And we know that a lot of companies are still closed down for business. So I think that there could be some problems. Employers right now, they're talking about if your revenues are down 50% in the last month or quarter, that you would be eligible for PPP stimulus. Well, what about the companies who are down 60, 70%? They're still really struggling. I think you're going to see some layoffs. But if I'm wrong and the job scene improves, that's okay too, because the market is pricing in a good recovery right now, and we'll be able to get back in another few weeks when we have more clarity. On a day trading basis, much different. If you're a nimble trader, you're watching the market constantly, there are lots of opportunities. So if you're willing to hold a position overnight and you're able to adjust your positions if the market did come in, then I think there's still some decent opportunities. We're doing great on a day trading basis. I'm going to show you some of the stocks that we've been in today. So I'll go into the 5-minute chart, take one more look at what the market is doing. There you can see that's the high from yesterday, right around that, let's call it 332 level. The low around 331. I think that support and resistance is going to hold today. Look at this chop in here, back and forth. There's no rhyme, there's no reason. You have a mix of green and red candles. From a day trading standpoint, twofold. One is that you can't count on a market tailwind. There's no momentum, so you can't really time your entries and exits apart from, gee, we're near the high of the day, should be resistance, look for a reversal, look for an opportunity to short some weak stocks, or, hey, we're down on the bottom, we've got 1, 2, 3 tests of support, we should bounce here, let's find some stocks with relative strength, good entry point. That's the way that you can currently trade the market. So set passive targets, look for stocks with relative strength. Instead of trying to short anything right now, we've had a good bid to the market. I am preferring to wait for these pullbacks, and then I'm buying stocks with strength. So let's go in and take a look and see what we've got that looks good today. Right out of the gate this morning, I traded PENN. That was in the first 5 minutes. I saw some long green candles closing on their high, 1, 2. I was in here, took a nice $2 gain on that. Really, really good. One that I bought early in the day as well is Plug. I like that stock a lot. I think it continues to chug higher. Why? Here's the D1 chart. You can see we've got this downward sloping trend line right here after a big rally. This is a classic bullish flag pattern. There's your flagpole, there's your pullback, there's your breakout. So this is a bullish flag plus earnings yesterday after the close. So now you've got a gap up through this horizontal resistance. Stock is on its high of the day. I made 50 cents on this stock earlier today. On an $11 stock, that is a 5% gain. Huge gain. So I think the stock continues to move higher. I think there's probably a pretty decent option play in here as well. This is a great technical pattern. So let's take a look and see what we got on the option side. The options are a little bit on the expensive side, so we may have to lean on some premium selling strategies. Let's take a look at what the August 14 puts might look like, and let's try and use that $11 strike price. You can see they're pretty rich. Let's go down to that $10 strike price because that is our breakout and that is the opening price here. At the $10 strike, you can see that those options are currently trading at 21 cents. So here's the play. Let's say that you want to buy this stock at $10. I think that'd be an excellent, excellent entry point given this earnings reaction. How would you play that? You would sell a $10 put naked On the notion that you would want to buy that stock, you have to put up 20% of the strike price, and in this case, that's $10. So we got to put up $2 if we sell that naked put. We're bringing in 20 cents, right? So 20 cents divided by $2, there's your 21 cents bid. You can actually get more than that. So if I divide 20 cents by $2, that equals 10%. So in 1 week and 2 days, you can make a 10% return on this trade if the stock does not go below $10. If it does close below $10 next Friday, you're going to be buying an excellent stock with a nice bullish flag formation that wants to go higher, and the stock is currently at $11.30, so it would have to pull back more than 10% for that trade to be in danger. That's a really nice play, especially with the market in all likelihood slowing down over the course of the next 2 or 3 weeks. That's the kind of play that you should be looking for. Option Stalker helps us find these trades. It's a nice option trade. I like it. But again, you got to be willing to buy the stock at $10. If you are, it's an excellent trade. And I would love to buy that stock at $10 given the price action that I've seen today. So let's see what else we've got. GSX was another runner that I caught today. Beautiful, beautiful, beautiful. Look at that puppy run. Wow. It's up to 123 right now. I caught it for $1 gain, then I caught it for a $2 gain. I've been preparing for this video, so I have not been able to watch it, but I'm going to show you how relative strength lines up. We've got the SPY overlay right here. We can also use the 10SI indicator. And here you can see how early in the day the market rally. This is the gray line right here. And then we had this big pullback. It's not a big pullback because the market's been in a tight range, so this is actually exaggerated. But on this market pullback, you can see the stock did not pull back at all. It held the bid. That told me that buyers were accumulating shares. As soon as we got through the high of the day, which was also the prior day's high, and you can see this parabolic movement yesterday into the close, I knew as soon as it got through that high, it was going to be an excellent buy. So I got in here, took $1 gain, got out here, took a $2 gain, and it's still continuing to surge higher. What can I do with it right now? Gosh, apart from day trading it, I cannot encourage you to sell an out of the money bullish put spread on this because now the stock has all of a sudden gone parabolic. We need to catch something when it's right here, right on that breakout. Then we've got some nice opportunities. You've got this upward sloping trend line. You got this $90 strike price that you can lean on. But once you're this far out of the money, now you're having to sell an out of the money bullish put spread somewhere way up here around the 115 level. After going parabolic, whoosh, be super easy for the stock to pull back. In fact, I would expect it to do something like that sooner or later. Too much risk, not enough reward. Got to catch these trades early. So let's keep on looking, see if we can find something else that sets up well. APPS is one that I've watched. This is a doji formation. You can see how it gapped higher. I'm still watching it. It hasn't been able to really show me that it's got relative strength. It's been flatlining after this gap higher. But here's the good news. When a stock gaps up like this, typically you're going to see profit taking, and you're going to see people who are long the stock pounding it, pounding it, pounding it, taking profits because they feel this is a great opportunity for them to exit. However, in this case, for every seller that there's been a buyer. So it has been able to hold its opening gap higher. I think APPS is the type of stock that continues to move higher even after today. So maybe today you don't need to get into it, but I certainly would have it on my radar. And if it starts to show some signs of life, and if it starts to get above this 2040 level, I think you've got an excellent opportunity. But again, too far out of the gate for us to consider selling an out of the money bullish put spread on this. You've got the stock went from $16 to $20. That is a huge percentage gain, 25% gain overnight. So that's not going to qualify for us either. Heavy buying's been one of my favorite searches to use, by the way. Gold has been on a tear. You've seen me mention that. I think that's getting overextended. You can see these gaps higher, but very tiny intraday ranges once it does gap higher. So I think gold on a pullback would be interesting, and I would be looking to buy it. But here, no, I think it's getting overextended. So Facebook, man, did I miss this one? I was on it early in the chat room, but I got preoccupied with a couple of other trades, and I missed that move. That is a huge breakout to a new all-time high. Again, this has been on all the searches. If I click through all of these stocks for the most part have been on the searches from the beginning of the day. And it's super, super important when you've got a market that's just flat. You got to get on these stocks early. You got to make your money in the first hour, the first 2 hours of trading, because then everything just goes flat. Nothing going on. And for those of you who trade S&P 500, very, very difficult trading conditions. You can't make any money trading S&P when it's just chopping around like this with lots of noise. However, if you use the 1OP indicator and you time your entry and exit and you use that as a market gauge, then you can find stocks with relative strength and still make a lot of money. So we are very focused on stocks. Facebook, what do I want to do with that right here? You've got this new breakout right here to an all-time high. I love this 245 level right here. You can see how that was the gap up from the earnings. That was also the prior resistance level. Let's go in and see if we can sell some 245 puts on Facebook. Stock is at 263. We're going to have to go out in time to do this one though. This one we're going to have to probably go out a few weeks because we're going to be 20 points out of the money, $20 out of the money. So let's start with maybe August 28th. And let's see what we can get for those 245 puts. So we'd be looking to sell a 245, 240, 250 bullish put spread. Click on the 245 puts, click on the bid. That means I'm selling those. Click on the ask of the 240, 250 puts. You can see that those are offered at 228. That spread is currently 27 cents bid, offered at 54 cents. When I do a spread like this, $2.50 between the strike prices, I like to get a 50-cent credit for that. I have to put up $2 for that trade. I have a potential to make 50 cents on it. That's a 25% return, and that is August 28th, which would be about 3 weeks and 2 days. Not too shabby. 3 weeks and 2 days, you can make a 25% return, and you would be keying off of this key horizontal breakout, which is major support. We saw the stock gap through it, test, 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 and now it's off to the races. I would expect Facebook to continue to move higher. As it does so, this spread will decrease in value also, and you'll be providing yourself with greater and greater cushion. So I do like that for Facebook. Would I be out there buying Facebook calls right now? No, I don't think that I would be because I'm still leery about the overall market. If I felt that the market was in great shape, let's paint a scenario for you. Let's say the market pulled back to a major support level and we had a 5% normal correction and support was being established, and I felt that I had a really nice market tailwind that I might have for 2 or 3 weeks. That type of tailwind is going to fuel a move like this. But without that market support, I cannot be a call buyer. I've got to stick with a strategy where I think I'm going to be able to benefit from accelerated time premium decay. So that is a safer play. It's a higher probability play. That's how I would want to approach it. Plus, you've got this huge spike up. Facebook is likely to give back some of those gains. It may even give back half of this long green bar that would put it at the previous high, and that would be very, very natural move. On a pullback like that to the middle of this long green bar with support, with the market continuing to look strong and ticking higher, then if you're bullish on the market and you see that type of price action in Facebook, then you can consider buying some calls on the notion that it's going to take out that high and continue to grind higher. So you got to be very, very careful with call buying right now. I'm starting to see a lot of laggards catch a bid, and that's typically a sign that the rally is getting tired. What do you mean, laggards? What do you mean, Pete? I'm talking about stocks like Disney. I'm talking about stocks like 3M. If I go into relative strength 30 or even pop bull, I'll be able to see some of those types of stocks. 3M, energy stocks, some of the restaurants, some of the retail stocks, those stocks have all lagged the market. And right now, we're starting to see them move higher. So just tells me that there's a rotation out of some of the really high flyers and into the laggards. As I mentioned, that is typically a sign that the market is getting tired and that we may be vulnerable to a market pullback. So I think those are some excellent opportunities. Let's just flip a few charts, see what we got here. Like that plug. I think it continues to go higher. Don't like it too choppy. Overhead resistance, no good. BHC, pretty nice. Should be able to hold this breakout right in here. If it is, this could be a good bullish put spread candidate, leveraging off of that $20 support level, which is prior resistance. But because it's been backing off all day, I would want to see 1, 2, 3, 4 days worth of support, and then to see it creeping higher when the market is flat. That would tell me that buyers are still there. That would be an opportunity for me to sell that out of the money bullish put spread. BMY, nice little breakout, again backing off of its high. I like that horizontal support level right there. We can actually sneak inside of it, go down to the $60 strike price. So that may also set up well for a nice bullish put spread. Got this upward sloping trend line that you can lean on right around that $59 level. So yes, there are multiple levels of support there. BMY, not exactly sure how much premium that's going to carry. $60. Yes, we should be able to get something pretty decent in here. So if I look at the $60, $59 bullish put spread, August 14th, which is 2 days and 2 weeks away from now, actually a week and 2 days from now, then we can see that 16 cents bid offered at 21 cents. I would need to get 21 cents for that spread. I want to see it hold at least half of this long green candle right here. It's got to hold its current level. We see that the market through the corner of the screen here is continuing to push higher. What's the stock doing? It's starting to hold its own. So it's right in the middle of that range right in there. A little close to the money for my taste. So I've got to take a pass on that BMY spread, but I would keep an eye on it. If it can finish and hold this gap for a couple of days, then I think that spread will still be there for you. You may have to go out an extra week. That's the kind of play that I'm looking for. I'm looking for post-earnings plays with some momentum and a positive reaction. So let's go into strong after earnings, take a quick look, see what we've got here. A lot of the usual suspects. I highlighted FEYE yesterday. Apple has been super strong. Look at that. Up again today. Really, really nice momentum. Um, Boy, it's continuing to push higher. Let's go into that 5-minute chart. Really, really nice strength. Let's put up the overlay for the SPY. You'll be able to see this is the kind of pattern that we look for. This is why the stock is coming up on our searches. How do you play this, Pete? Well, you've got the market pulling back hard right in here, that gray line. What's the stock doing? It did pull back a little bit right in here, but barely. It was still higher than its opening price. And as soon as the market bounced, whoosh, it took off. You got another little relapse here, another retest with the market pulling back. This really is the key pattern right in here where you got the market pulling back, you got the stock compressing very, very tightly in here. So buy, 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 buy. If sellers wanted to pound this stock, they would have done so on that market pullback, and they were actually selling, but there were more buyers than sellers. So before this dip had even found its bottom, this stock started to move higher. And that's how you knew that this was an excellent, excellent entry point right here. So if you're an intraday day trader, that's your opportunity to either buy the stock or buy in the money weekly calls on it that have a very high delta of, say, 0.7 or higher. That way you're going to have those options move point for point with the underlying stock as it moves higher. Right now, you've got to be a little bit careful. Well, how do I know that, Pete? What do you mean? How do I know that? How do I know that Apple's not going to go to $450? How do I know that I should have gotten out? Well, it's pretty easy. You take and you draw your upward sloping trend line right here, and oh, wait a minute, I'm through it. So I should take profits up here. Yes, you should. but there was another clue. And that other clue is right here. This is the 1OP indicator. It's telling us that we need to be a little bit careful right now with the market because we have a bearish cross right here. So we watch the 1OP indicator all the time. Look at down here. Down here, you've got the indicator coming in. You've got a nice little cross right in there. It's telling you this is a good opportunity to get long. So this one didn't really predict this move, but that was a pretty dang choppy one. You can see where it came into play right in here, which is not particularly late. It told you that there was a problem here, but that was a pretty long red bar. This is all choppy type of price action, but you should watch this indicator. And on a more active day when we've got a normal range, you're going to see more normal movement in this indicator as well. But yesterday and today, with the S&Ps being in such a tight range, this is just chop. You got to find those stocks that have that really, really nice relative strength. The best time to evaluate that is on a market dip. That's when I'm the most active in this environment from a day trading standpoint. I love these moves because they help me identify that relative strength. When I see a stock that's been trading higher through the course of the day, it's through the prior day high, it's through the high of the day today, it's got a nice strong uptrend, it's got good volume, and the market comes in and the stock does not flinch, buy it. Set passive targets, market rebounds, stock shoots higher, take your money. So that's how we do it. That's all I've got for you today. Market's really pretty lackluster, but that is how we trade. We've got a ton of searches, whether it's strong after earnings, heavy buying. This shows us stocks that are breaking out. They've got heavy volume. They're strong relative to the market. I got a lot of other indicators. This is my go-to search right out of the gate. Every morning, I'm able to find 2, 3, 4 stocks that are really, really strong. I just have to make sure that I've got a market tailwind or at least a decent read on what the market's going to do. Today, when I saw the market open within the range from yesterday, especially when it was a very tight range yesterday, I figure we're going to have a pretty slow day today, especially ahead of a major economic release tomorrow. Jobs report, going to matter tomorrow? I don't really know. It's going to have to be a pretty horrendous number, I think, to knock this market off of his feet. Otherwise, a bad number. They're going to expect a $1.5 trillion stimulus package. Hey, look what we got here. I'm not going to conclude yet. We got APPS. I set that alert line and I had it drawn right there, and now I just got my alert. These alerts are how you find trades also. Look at that baby go. Looks like it could be a decent one. I'm going to check it out. Going to go in my chat room, let everybody know that this stock could be ready to move. That's it. That's all I got for you today. If you like this content, please give it a thumbs up. Please subscribe to this YouTube channel and turn on your notifications so that you never miss one of these videos. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.